Hey everyone, Eric here. In this video, we're going to discuss finance interview questions and answers for entry-level roles like internships and analyst positions. If you don't know me already, I've worked in finance for the last 8 years with startups, starting as an intern and now working in executive roles. So I've both been interviewed and interviewed candidates many times. Okay, let's get started. Preparing your mindset. The reason we prepare for interviews is not to know the answer to every question in advance. It's to think about why we want this role and what are all the experiences in our lives that led up to this moment. These are the answers that I would give to the following questions, but it doesn't mean they're necessarily the best or the right answers. Okay. First question. What is the goal of finance? So the core thing that finance does is that it allocates capital. That's whether you're on the investment side, like investment banking, or corporate finance, like running a company. Finance people invest capital. And so in order to do that, you need to create plans and projections about the future to try to identify the best opportunities. And then what is a good opportunity? Generally, the best opportunities will be good for shareholders, so you'll make money. They'll be good for employees, and they'll make the customers happy. All of these three things need to happen at the same time, or else the whole thing stops working. If employees are unhappy or if customers are unhappy, shareholders won't make money. So it's all about allocating capital towards the best opportunities. Next question. Can you describe a financial model and walk through one that you built? Okay, so a financial model predicts the future. It predicts the revenues, the expenses, and the profitability of an overall company in the future. So it's basically a guess about what will happen, but it gives you the opportunity to see it before you do it so that you can make changes to your plan. So one simple financial model I built, and I included a link to this down below. It's called How to Build a Basic Financial Model. Really, really simple, but would help you understand these concepts. So I'll walk through that. It was a company that made chairs, and I looked at the total number of chairs that we made, and then I multiplied that by price to get our revenue. I looked at the manufacturing cost per chair to get the overall costs, and then I calculated our other expenses. So we had payroll, we had some marketing, so I could understand our overall operating profit. And then finally, in the years where we had positive profits, because some years we had negative profits while we were scaling up the company, when we finally did turn a profit, I calculated taxes and subtracted that from your operating profit to get to the net income. So that's how I built a basic financial model for this chair company. Walk through the main sections of a P&L. P&L is income statement, by the way. So you have a few main sections on the P&L. You start with gross revenue. And from gross revenue, that's just the price times all of the everything that you sold. You subtract discounts and refunds. That gives you net revenue. Net revenue is basically all the money that you actually collected. The next section is called cost of goods sold or cost of sales. Same thing, different names, but same thing. This is where you put all of your direct costs that are directly related to making your product. So if it's a physical product, it's like your materials costs, your manufacturing costs. If it's a tech product, a lot of times there aren't a lot of costs in terms of the cost of sales. There will be some like server costs and some technology stuff, but whatever directly goes into supporting your product, and then your net revenue minus your cost of goods sold is your gross profit, which is like the profit margin at the product level. Below your gross profit, you have your operating expenses. These are more of your fixed costs, so you'll have the payroll of the management team. You also have marketing goes in your operating expenses, and things like rent, consultants, insurance, all of these kind of things are in your operating expenses. And then your gross profit minus your operating expenses gives you your operating profit. This is also known as earnings before interest and taxes, or EBIT. From your EBIT, you finally have one last section of expenses, and that's interest and taxes. So interest is any interest you're paying on any debt that the company has. You put it there on the income statement. And taxes, you calculate based on your EBIT to figure out, okay, what percent of your income do you need to pay to the government in taxes? And then you subtract those from your EBIT and you get your net income. So that's how an income statement works. What are the three main financial statements and what do they show? Okay, the three main financial statements are the income statement, the balance sheet, and the cash flow statement. The income statement shows you all the money you made and all the money you spent on your core operations. The balance sheet shows you everything that you own and everything that you owe. It's as simple as that. The cash flow statement shows you all of the ways that cash came into the company and left the company. So cash comes in and leaves from operations. Cash comes in and leaves from investing. So the company investing its own money into, say, factories or other companies. And then the third way is from financing. And that's the situation where outside investors actually invest into our company. So maybe they're lending us money or buying shares of our business. So there's three main ways that the cash comes and goes from the company. How would you evaluate the financial health of a company? So there isn't like an exact right answer on this one, but if I was looking at a company and I didn't know anything about the company, I'd say, how much cash does it have? Then I'd say, how much debt does it have? And then I would say, I would look at how much revenue it generates. But more importantly, I would look at if the revenue is increasing. I look at the trends over the last couple of years to see, okay, is the company growing or is the company shrinking? If it has a lot of debt, but it's growing a lot, maybe it'll be easy to pay that debt off. But if it has a lot of debt and it's shrinking, then the company is probably in a terrible position. From there, I'd probably just look at the net income to see like how profitable is the company, and probably some cash flow metrics, like maybe operating cash flow, to see how much cash is the business actually generating from its operations. And if I looked at all those things, I would have a pretty good idea of the overall financial health of a company, and I would know sort of from there what to look at next. What is cash versus accrual accounting? Okay, so accrual accounting follows something called the matching principle. And pretty much all accounting is done based on the accrual accounting method, not the cash method, not the cash-based accounting. So accrual-based accounting has this rule, and it says you need to match your revenues and your expenses with the time that you provide your product or service. It sounds like it makes sense, right? But it's more complicated than that. And let me explain through an example. Let's say that we're a car company that takes a couple months to deliver the car, like Tesla right now. If you order a Tesla, you're gonna have to wait a number of months before you can get it because there's so many orders. So let's say you paid Tesla in January for the car. You send them the money. Tesla receives the money in January and they say, we can't deliver your car until April. The accrual-based accounting method would say, okay, you received this money in January, Tesla. You can't report it as revenue. You can't put the revenue on your income statement until you actually deliver the product or service, until you deliver that car. So Tesla would actually have to wait until April to put the revenue on their income statement. They would collect the cash, but they couldn't report it. And they would also, correspondingly, have to take all those costs associated with the car and report them in April too, even if they spent the money earlier. And so that follows the matching principle. You need to match the revenue and the costs with the timing of delivering the product or service. And this is very relevant with other companies, like they run events. Like if you're if you were having a concert, for instance, you'd be selling all these tickets in advance, but you can't actually say that you earned that revenue until you put the concert on. So that's the accrual-based accounting method. Cash-based would just be that you report anything when the cash actually comes in or leaves the company. And so that's used less, but you'll see that sometimes as well. What's something interesting that's happened in the capital markets recently? So The only way you can prep for a question like this is to actually follow the capital markets. Like, you can't have a canned answer because these kinds of things are changing all the time. But I'll give you sort of like what I would answer if someone asked me that today. It's December 2020, just as a reference point. But if you're preparing for an interview, it'll be sometime in the future and the situation will be different. So in 2020, right now, the coronavirus pandemic is going on in the world. And something interesting for me that's happened in the capital markets is we were following all the tech companies and their market share. So a lot of these businesses that do like e-commerce are competing for in-person customers who usually go in person, and they're trying to get them to go online, right? And there were projections around what their market share would be in 5 years or sometimes even 10 years out from now. And we were expecting, okay, it's going to take 10 years to get, 4 more or 10 more percentage points of market share. When the pandemic hit, we saw many of these companies take that market share in 1 month. So like jumped 10 years into the future immediately because all the customers were forced to shop with them. And that caused like a massive, massive increase in the valuations of these companies, which is fascinating. And it's caused a complete disruption across financial markets in this split between winners and losers, which is very, very dramatic. And it reflects the way that the world is actually functioning. And we don't know to what extent the world will return back to something like before or after the pandemic, or people will continue behaving in the same way after the pandemic. So obviously the most interesting thing for me is market share and businesses that have taken physical infrastructure and made it digital and are distributing their products in a way that's easier for people to buy things now that they're sort of locked inside. And finally, I would recommend that you ask your interviewer a question. I always ask interviewers questions, sometimes tough questions. And actually a couple times I've asked an interview a question and received an answer that made me really concerned, and I've pulled out of the interview process. So it's an opportunity for the company to interview you, but also for you to interview the company, because you're going to be spending a lot of your life at this place if they hire you. So you want to make sure that it's the right fit. So one thing that I like to ask is, what is the goal of finance at this company? That's going to tell you about sort of like how your department would fit into the ecosystem and sort of what's the mission of the team. Also, I would ask a specific person, what's something you've done on the finance team that you're proud of? That'll tell you about the values and sort of the ethics of the person. And if the thing that they say they're proud of, you think that's really interesting and great as well, they would probably be a good mentor for you. But if you completely disagree or you think it's really boring or something like that, then you should be skeptical. So those are some example questions, but sometimes I also ask questions like, do you like your job? Things like this, are you happy here? Because sometimes people will give you a really honest answer. So I hope these questions gave you some good background and got you thinking about how to answer finance interview questions for entry-level roles. Also, if you like this video, please subscribe to my channel, click the bell, and enable the alerts notifications so that you don't miss any of my new videos when they come out. I also included down below in the description some links to some other videos like the how to build a basic financial model, as well as some other finance videos that I recommend that you study and understand before you go into your sort of entry-level finance interview. Anyway, I hope this was helpful for you, and see you in the next video.